Hi, good morning. Welcome to Morning Kappa. I'm Meagan. Here we come to the week 5 of July with futures. Before we begin, as usual, I would like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes only, and it does not consist of any invitation or recommendation for buy or sell any financial instrument. So please consult your licensed broker before making any trading decision. Okay, the market landscape in week 4 reflect a sharp sector rotation. A multi-section session sell-off across mega cap tech and semiconductor equities has dragged key US benchmark lower. Meanwhile, the capital continued to cycle aggressively into industrial commodities and selective regional markets. For local products like FKLI, FKLI maintained its standout momentum with a back-to-back positive profile in both weeks, and FCPO surged from a neutral stand to positive outlook this week. In Asia, the Hang Seng Index moderate from its positive view into negative stand this week, while the China A50 remains stuck in neutral stand. In the US market, both the Nasdaq and S&P 500 broke down from their neutral profile into negative this week. Profit-taking in heavyweight semiconductor stock and elevated AI valuation continue to weigh on growth indexes. However, their broad long-term overview trend remained positive. The Dow Jones and Japan Nikkei 225 held from neutral this week. The grain complex, corn, soybean, and soybean oil is holding flat in neutral outlook. For metal, gold continued to build a base, printing a neutral outlook while maintaining its long-term positive trend. Both silver and copper are stabilizing, delivering consecutive positive profile across both weeks, alongside solid positive long-term overall trend. Crude oil has dropped back into neutral stand following last week's surge, though its long-term overview trend is still positive. Natural gas continue to underperform, structurally trapped in neutral weekly outlook under an overall negative macro view. Okay, the market that's on our radar is gold. Gold slipped to around 4020 per ounce, giving back to a previous session gain as a stronger dollar weigh on sentiment ahead of the Federal Reserve upcoming policy decision. The Fed will conclude its two-day policy meeting today. Now, market expectations are split. About 62% anticipate rates will be held steady, while 8% expect at least 25 basis point hike. Meanwhile, the precious metal remain at risk amid elevated global yield and volatile oil prices. A higher interest rate environment typically pressure non-yielding assets such as gold. As a result, gold has given back roughly about 3.5% since last week. The chart now shows how the week has gone for gold since our last meeting last Wednesday on Morning Kappa. Market is still performing a consolidation play. The market tipped at 4171. The market tipped at 4171 and quickly rejected by the seller and dived back to 4020. Our view is any failure to remain above 4020 would shift focus to the next key support of 3961. In fact, 4020 is supported again. The market will challenge back to 4120 level. WTI crude oil futures fell to 80 per barrel yesterday, making a third consecutive session of losses after President Donald Trump said the U.S. was engaged in good talks with Iran aimed at ending Middle East conflict. The remark fueled optimism that normal oil flow from the region could resume. The U.S. quietly halted attacks on the Islamic Republic late Friday following nearly 2 weeks of fighting, while Tehran also ceased strikes against US bases in neighboring countries. Meanwhile, Iranian and Omani negotiator met over the weekend in an effort to secure an agreement to restore the shipping through strategically important Strait of Hormuz. The chart now shows how the week has gone for crude oil since last Wednesday. Prices surged to 93.47, descend from the tip back to 86, and dived down to 77 yesterday night. If this support is breached, the next level to monitor is 76.74. However, market would reverse if, let's say, 76.74 is supported firmly. The nearest resistance will be 81.87. So since the touch of 77 yesterday night, market actually have a roller coaster ride and has swung the prices back to 82 this morning. So therefore, the rebound has done, but however, we are still anticipating, this is where it has swung. We are still anticipating a rebound back to 86.32 if, let's say, this 82 is supported later on. Okay, before we look ahead, let's recap the market guide over the last recent weeks. These are the three, following will be the three market guide remain in position. One is micro copper, our market core, which is initiative on the 24th of June. And currently we are in position. It is staged for a positive outlook at the reference price of 6.11, with the current price now at 6.36. The second call that we made last week which trigger our reference price at 1710, and the market price now is 16.5. Last position we had is micro silver, which has triggered our reference price at 57.19, and the market price now is 57.215. We experienced some hiccup in July where we experienced two losses. Micro natural gas that we call on the 8th of July triggered a potential loss level, resulting in a realized loss of USD 225. And the second losses lie on soybean oil market call 2 weeks ago, where we experienced potential realized loss of 510. As usual, the highlight of a briefing, the future market call, we are anticipating a potential opportunity in FCPO. The initial investment is 8,000. Short-term chart setup is positive. Reference price is 4630. Potential profit price is 4720 and 4816. And our stop loss price is below 4580, capping a loss at 1250. So the risk and reward ratio for this market call is 1 to 1.8 to 3.7. Okay, if let's say you are interested in what we are sharing, we are pleased to announce that the launch of our exclusive initiative, the AMPM Market Guide, which has been launched since June, strategically designed to assist you in navigating crude palm oil intraday movement. This service provides 2 daily market call, one in the morning, one in the afternoon. Please note that all trades are strictly intraday with no over-session position. So if you are completely new to the future market, sign up a futures account with us, which give you up to 500 in zero brokerage trading. So get in touch with us or drop us an inquiry on the RHB Invest website today. Well, the good news is every trade you place will automatically qualify you for trade and win lucky draw entries, giving you chances to win a Tesla or take away the monthly prices of iPhone 17. So don't forget, every trade that you trade in futures will have 2 entries. Every trade will have 2 entries in futures. So start trading now and tap on our exclusive AMPM market guide today. So I think that's all from me. Thanks for your time, and I will hand over to the next speaker. Thank you.
Right. Okay. Morning, everyone. Thank you, Megan, on the weekly futures update. And we look at the Hang Seng Index. You can see that Hang Seng managed to break out from the 300 point resistance, extending the upside movement so far. So for the past 2 weeks, the Chinese authority have pledged their support on the equities market, and as a result, you can see that the banking stocks have lead the sentiment in the overall market. Now, despite that, the banking stock is moving upwards. We do see that the tech stocks are lagging, become the laggards in the market. So apart from the banking stocks, you also see that consumer stocks have been moving in tandem higher high as well. Um, so for the Hong Kong market, right, on the Monday, we have mentioned about TCL Electronics, as well as Bank of Communications. And today we'll be looking at Costco shipping 1919 that break past 15 Hong Kong dollar 70 cents. Our R1 will be at 16.50 and followed by R2 17.20. Down support is 15 Hong Kong dollar. Then on another the state-owned bank, which is the Agriculture Bank of China, 1288, right? You can see that the break past 6 Hong Kong dollar 10 cents, heading towards 640, followed by 670. Down support is 580. So in the Hong Kong market, we'll be looking at the blue chips counter, right? Especially the banks, the consumer sectors, as well as the transportation sectors like Costco shipping, right? And so apart from the agriculture bank, right, you can also look at the constructions bank 939, as well as the ICBC as well, which is they are moving upwards recently. As for the US market, right, there is a slight rebound as of yesterday sessions, right. However, you look at the another index, which is XOX, that track the Philadelphia semiconductor index. I can see that the tech stock in the US are still experiencing selling pressure or profit taking right now, right? And yesterday I've discussed with one of the dealers that looking at the US market. So I noticed that one of the stock that we have shared on Monday, which is General Motors, the stocks have went up higher and right now hitting our R2 level right now. So you can see that the General Motor have about a week ago, they have actually released their company QR quarter results and give a positive guidance. And then 1 week later on, right, yesterday was the Ford Motor that their turn to actually give out results. So what I want to remind everyone is that in the US, it took 1.5 months to complete their earnings seasons, and even in the same sector, just for example, like auto sectors, right? A company, the space in reporting sometimes could take about 1 week or 2 weeks in between, right? So there's a time lag, or there's a time that we actually can seize on this time difference in the reporting dates. That if General Motors is giving a very good results and also a very positive guidance, right? We do expect that the Ford Motor is giving something similar, right? As such, you can actually time your trading and look at the sectors and different counters in that sectors. So as a result, this morning I checked on the Ford Motor. Again, Ford Motor have lifted their full year guidance by raising the ASP, although inflation's risk is happening in the market, but they have show confidence that even raising their selling price, right, their sales will be delivered for the full year. So you can see that technically, Ford Motor is moving higher, testing the 15 US dollar, and the next R2 will be at 16 dollars. So apart from the auto sectors, I'll be also looking at the cyber securities, right? As you can see that recently the oil price have actually pulled back sharply, right? Another sectors that actually will benefit from a lower oil price will be the airlines. So actually can pay attention to the airline counters as well as the leisure counters in the US market, right? And So as for Malaysia market, can see that FKLI have a strong rebound yesterday. It bounced off the almost 1,007 or the 50 days moving average, showing that the bulls are still in control, right? And yesterday, the smart money looking at the blue chip counter, especially the Tenaga, have lifted the return on the FKLI. So as selling pressure have subsided in the US market and also the Hong Kong market have been moving higher, so I think that the sentiment may turn bullish today for our local market. So potentially FKLI could resume towards 1760, and with the momentum sustained, it should climb towards 1008 as well. So downside support is at 1680, right? And in tandem with the weakness in the crude oil price, FCPO also have declined for the third consecutive sessions. Started off with a shooting star 2 days ago, and yesterday you have charted a fresh bearish candlestick. Right now testing our support at 4530. We still keep a bullish bias on the FCPO until it breaks below 4530. As for the trading stocks this morning, firstly, we look at Malayan Cement, M Cement, that climbed above 6 ringgit 45 cents, moving towards 680, followed by 7 ringgit and 70. 7 ringgit 15 cents. Downside support is 6 ringgit and 10 cents. Secondly, we have the property counters. Massing have break past 98 cents on the back of high volume. So Massing should be climbing towards 1 ringgit 5 cents and followed by 1 ringgit and 10 cents. Downside support is 94 cents. So we have M Cement and followed by Massing, both breakout stock. I'll stop here and pass on to Wei Siang. Thank you.
Okay, thanks, Joseph. Morning, everyone. Let me continue with a results review report on Nestle after they released their second quarter 26 results yesterday. So essentially, second quarter or first half 26 results were broadly within our expectation, but above the consensus by accounting for 55% of our forecast and 60% of the street's estimates. Looking at the numbers, first half sales saw a solid 8% growth to 3.7 billion. This is anchored by the resilient domestic consumption and stable export sales. Meanwhile, we saw a good 1.9 percentage point GPM expansion to 32.3%. That's mainly reflecting the more favorable input costs and forex, and this is further aided by continued efficiency enhancements. And with OPEX rising largely in tandem with the top line growth, we saw net profit surging 26% to 357 million. And on a Q-on-Q basis, although sales were seasonally lower at 1.8 billion, which is a 4% decline Q-on-Q, second quarter gross margin stood at 32.8%. That's the highest level in 4 years as the recovery remained well intact. Dividend of 80 cents was declared for the first half. This is higher than the 70 cents for first half 25. Going forward, we believe Nestle is on track for a year of sustained resurgence supported by accommodative government fiscal policy, improving sentiment towards its brands, and disciplined cost control to preserve profit margins. Geopolitical tensions could translate to cost inflations and supply chain disruptions, but we believe Nestle's fundamentals in scale of operations and global network of supply should mitigate some of the impact. And notwithstanding the downside risk to consumer sentiment as a consequence of war-related disruptions, we believe the consumption for staple food products should remain resilient, supported by wage growth and stable employment markets. So post results, we make no changes to our earnings forecast and target price of 130 ringgit, which implies 44 times forward PE. This is just slightly above the stock's 5-year mid. We continue to like the stock for its defensiveness, and we believe the current valuation presents a good opportunity to accumulate this quality defensive name. So all in, we maintain buy on Nestle. Target price remains at 130 ringgit. Thank you. And let me pass on to the next speaker.
Good morning. Yeah, we have visit note on Ecoworld. We recently visited the company's maiden DC data center project at EBP 5, which is at Ijo. So to recap, both Ecoworld and also Pearl Computing Malaysia entered into a build and lease agreement that was in February 2025. So this agreement is for a core and shell data center to be built on a 92.44 acres of land at EBP Eco Business Park 5. So this 20-year lease agreement has a total rent payable of 4.8 billion and is renewable up to 10 additional years. So during the site visit, we saw that the construction site was pretty busy, probably at the peak of the construction cycle, with lots of cranes and also workers. According to the project team, the build to lease DC will have 2 data halls, and both are on track to be completed progressively in second half next year. The bulk of this lease income will kick in upon the completion of the first data hall, which is sometime middle of next year, given that the broad infra for the whole DC site will also be completed then. During our meeting, we gathered that the 20% JV partner has already come in for the DC asset. It was since last month, and management did not elaborate further on the terms, but the 20% JV partners' participation certainly will help to elevate Ecoworld's funding commitment to this big-scale investment property asset. Based on our estimate, the DC asset should contribute about 110 to 120 million to Ecoworld's PBT on a full year basis upon the full operation of both data halls. So EBP 5 is now left with about 20-30 acres of land to be sold or for development. According to the team, industrial land prices there has escalated from about 75 ringgit per square foot pre-COVID to now about 130, 140 ringgit per square foot. Nevertheless, management has no intention to acquire more land to extend the industrial development, EBP 5, but will instead focus on the region that the company has a strong track record in, which is in Iskandar, Malaysia. So the 2 new industrial parks, EBP 8 in Kulai and also EBP 9 at Iptec Ibrahim Technopolis, are scheduled to be launched in end of FY26 and also FY28. Same as other peers like SIMW Property, Ecoworld is also exploring opportunities for build-to-lease industrial projects so that it can build a portfolio of investment properties in the long run. Given Ecoworld's aggressive effort to expand its industrial segment and the wide network of clientele, it's not difficult to achieve this initiative in our view, but balance sheet capacity would probably set a limit on the amount of investment property projects that the company can undertake. So all in, we are still pretty positive from Ecoworld, given the track record and also that the DC construction is on track. We maintain our buy rating. Target price is unchanged at 2.78 ringgit. Yeah, so that's all from us today, and I hope to see you all again at our RHB Morning Kappa 8. And happy trading. Thank you.